What's up, everyone? How's it going? Welcome to this week's pre-week analysis. This is going to be of the first week of August, August 3rd to August 8th, and I'm very excited to see how this month and this week especially plays out because as you noticed, this last week, and particularly the end of last week, after we broke out these all-time highs once again, start seeing very aggressive selling start to come in which we're actually able to capitalize on a part of it. And now our job for this week is definitely to identify the different levels and different areas of interest in which price may potentially either continue going down or where price might find struggle continuing down and provide means for price potentially to head higher. It's honestly going to be a waiting game to see how the New York market opens next week and where we can identify clear market interest. But from the time being, this area down here is already visibly shown as a very high volume area. Last time we came into this relative range, what we saw was that we just revolved around it for quite a bit of time. So I honestly hope that doesn't happen because we did not perform the best during, no, we did perform pretty well during this part of the range, but right as we started getting into like that weird portion of the range where we were coming in and out of it, that's when things start to get difficult. So hopefully we might see a clear move downwards, but what I don't want to see is revolve it outwards of the zone, then back inwards, consolidation, back outwards, back inwards, move up, back inwards. That's what I don't want to see. I just want to see something in which we can have predictable edge over the market and something where we can follow capital and something that will allow us to, in the end, capitalize on the conditions provided by ES mini futures and NQ mini futures as well. But before diving in deeper, let's go ahead and take a look at the news that we've got on our hands for this upcoming week, starting from tomorrow, August 4th. Oh yeah, and in the beginning, I meant to say the week of August 4th to August 8th, not August 3rd to August 8th. But that's not that deep. Okay, so what we see is that tomorrow, Monday, it is a Canadian bank holiday. That's the main thing I'm looking at right now. We do have some factory orders and loan officer survey. Low impact, not worrying about such. Monday is going to be essentially a non-news day, likely with low volume as well, because we don't have those Canadian market participants entering in, and it's going to be a Canadian bank holiday. So I did phrase that a bit wrong. Typically, when there is a bank holiday in major markets, which is Britain, Canada, or United States, typically less volume is involved when either one of those has a holiday. That includes US, of course, but outside of US, Canada, Canada, and Europe are the two main examples. So Monday, I expect it to be a low volume day, so I will be careful. But if we see anything that stands out to us and that we have good confidence on, we won't be scared to take it. On Tuesday, we have final services PMI, ISM services PMI, and that's essentially it. So since that's at 9 a.m., I think a good plan for Tuesday would simply be to avoid that 9 a.m. time, trade before and trade after, so we can start trading around 9:05-ish after, and we can potentially make any trades 8:55-ish and prior. But then again, it's going to be quite difficult to take it here, so I'm expecting most, or if any, setups to happen after. Let's go ahead and check Wednesday now. Wednesday, we have crude oil inventories like typical Wednesdays, and that's going to be essentially it for Wednesday. So Wednesday is a very low news day. Not really any high impact news. But also keep in mind this as well. When there's not high impact news, there typically is associated less volume in the market, and depending on the type of strategy that you have, you should know when and what conditions your strategy performs the best in. Some strategies perform well in high volume, some perform well in low volume, some perform well in all volume situations. You need to know how to adapt to different conditions and come out on top essentially. But yeah, Wednesday I'm not really seeing much other than crude oil inventories, which we shouldn't worry about trading ES and NQ really. Thursday we have some monetary policy GBP news. Shouldn't really impact us too much, but at 7:30 we do have unemployment claims. I will be trading on Thursday nonetheless. Unemployment claims, it's typically not a day where we take off, and I actually stopped taking off even on NFP days and FOMC days as well, simply because I like the higher volume that's associated with it, allowing me to capture larger moves, but it just depends on what we are provided on this day. Always looking for high confluence setups on these days though, because there are certain unknowns that we don't know that we don't want to mess around with. But yeah, unemployment claims not even in the main market session, but IV PMI and this 9 a.m. news is the only thing I'm going to be worried about. Nothing else will really affect me here on Thursday. Friday we have nothing really. We just have FOMC member Mausoleum speaking, and like what I like to say, if it's not Powell, you don't have to worry about it. So yeah, nothing really on Friday as well. This week, like most first weeks of the month, not really any news. But let's cross-check that using financial juice as well. We have factory orders is on Monday. Let's go back to Monday. Apply settings, factory orders. Mm, we might take a 5-minute interval there simply because it is a very quick release. And since it is factory orders, I do see it potentially impacting the markets. So I'll likely take an interval at 9 a.m. Monday. Tuesday, same thing, 9 a.m. PMI. Wednesday, crude oil inventories, we don't have to worry about. Although it is, I mean, it's always better to be more safe than sorry. We do have a lot of earnings coming out on Wednesday as well. Uber, McDonald's, Disney. Just keep that in mind as well. Crude oil Wednesday. Thursday, we have jobless claims at 7:30. But during the main session, we don't really have anything we have to worry about other than Canadian IV PMI potentially. And wholesale inventories month on month. Friday, nothing we have to worry about really. So yeah, how would just avoid being within a trade during these high impact or quick release news events if it impacts your market. And if you don't know if it impacts your market, just stay safe instead of sorry. But yeah, that's essentially the fundamental news overview of the market. To dive deeper into that, what we have to understand is that what we have seen happen was that greed was insanely high at around this area. Greed was out of the roof. I mean, it was very high. Greed was very high. I mean, it wasn't out of the roof, but it was still very high. But then, suddenly, because of FOMC and earnings and a variety of other news data, we pumped up, breaking these all-time highs, and at this point, greed was simply high. Does that really make sense in a fundamental aspect? Not really. And there's two ways you can think about this, right? But how I thought about it was that if greed was very high here and we simply went above that area, that puts me in more caution of continuing to push price higher, right? But here greed was high, so what we saw was that greed decreased from very high to high, which could be a bullish aspect, but could be telling us that greed is decreasing and we might be entering into a fearful cycle. And that's how I interpreted the market, simply in a value area as well. Nobody really expected the markets to flush these highs like it did. Realistically, it should have took longer for us to flush the highs, but since we had FOMC news and other earnings, flush the highs, made a quick, aggressive selling move towards the downside. So definitely gonna view sentiment data as it comes out next week as well. Gonna be taking a look at all of that. U.S. stocks future rise after Friday's drop on Wall Street. Oil fell against OPEC slightly after Wall Street ended last week. This first session. We hop on daily right here to see. Yeah, I mean on one day we went down almost 2% on ES. Now we are rising, so in a in a sense of a mean reversion mindset, we pushed up very strong and then we came back and essentially rebalanced. If we take a look at it in that same perspective, we are holding these lows right here. If we continue to hold these lows, we might be able to rebalance somewhere towards the middle of this range, and that might be something we are able to catch tomorrow. But then again, we can't really know that without any of our setups showing up. So what we can do right now is simply mark out our key levels and set ourselves up for the next week. And we have already done a great job of discussing fundamentals, but now let's get into the technical aspect of things and looking at volume and a variety of different analysis of where market participants are, and we'll see how we can leverage what we have to potentially make successful trades in this upcoming week. So what we see is that this lower level is literally got taken perfectly, and now we're seeing some buying action upwards. I'll mark out both levels because it will not hurt to do so. But we came back to this level, and honestly, the levels, there's just a lot of levels in at this area, right? Which could make it potentially harder for us to continue to head down. And it makes sense if you think about the market, right? And I'll tell you why price came to this area. This area has, let's see, F13, let's go 1 hour. So let's see what time that was. Where we saw the 13 end of day. Alright, bull market. Let that be. This level as well. And what you're noticing as I'm marking this out is that most of our levels that we're marking out, take a look at when they're occurring. These two levels in itself just came up at 9 a.m. This one, end of day. This one, 9 a.m. This one, pre-market. But if you look here, 9 a.m., 5 a.m., this move 9 a.m., this move right here, end of day. This high right here, around 9 a.m. This low right here, 9 a.m. So you can see how that market open plays a significant role into how market structure is defined, and it makes sense in an economic perspective as well, but yeah. Let me just stop talking so much and let's just mark out all these levels really quickly, shall we? I'll just mark down until this lower region right here. And that should do the job quite right. Mark out this region. For hour. So you have 4 hour right there, looking for more potential zones that we can mark out, but I'm not really seeing anything as we did flush out these lows. What I'm looking for more is selling areas that we might be able to mark up top. As you see, we're not seeing anything there quite yet other than levels of liquidity, potential levels of liquidity, because really just simply by looking at a chart we cannot confirm or deny that there's actual liquidity there without using Bookmap, but what we can do is either validate or invalidating using volume, which we will do later. Not seeing any zones here perhaps, but yeah, nothing else on the 3 hour. 2 hour, this area will count as a level of interest, and what I'm liking is that we did make a retracement continuation downwards, and that was Friday morning as well. We do have this level as well right here, which again is from that retracement after an aggressive move down. We're gonna have that area, but I'm not liking that area in terms of marking it out. But we'll mark it out anyways. But just take a look at how many levels we have down here in this lower cluster of liquidity and how we're starting to compress where our liquidity is, right? Look at how wide this move is, right? How can I explain this? Okay, say we just simply marked out these two levels. The standard deviation from here to here is a lot bigger than the standard deviation from here to here. And what we're seeing is a downwards trend. And what I mean by this is that as we are moving down into this range, what we are seeing is that we're compiling liquidity levels closer and closer to each other, which is an indicator that we might can stay and chop around this range once again like we've did here, like we've done there. But yeah, let's see if there's anything else you can mark out on the 2 hour. I'm not too confident in such, but we will mark out what we see and see what we can confirm or deny using volume. It's 2 hour there. We do have this area. It's really not worth marking that out. We have that level there already. Let's see. This 1 hour held, but we broke below here. I'm gonna mark it out. Yeah, this region is very good area to have marked out. It's gonna be a very key level that on the lower side that price likely wants to tap and react off of. What we've seen is already 3 touches here at this level. 1, 2, 3, and if you count this 4, you can count that 4 as well. But we have multiple touches within that level. It's not even a 1 hour, it's a 2 hour. 2 hour right there. Not noticing much else really on the 2 hour from what we have marked out in our range. So how about 1 hour? And 1 hour is where we start to get a lot more zones and those smaller, more precise areas that we might be able to leverage. We'll have all of this marked out. Even if price gets to this level, it doesn't mean that we should enter into any position. Okay, let's do something real quick. Let's call it a small experiment, right? Simply by looking at this right now, you can tell where a low volume node is, and where a high volume node is. And without even using the volume profile, I'm gonna guess it right here. This region right here, high volume node. High, okay, I don't know what I was trying to write there. High volume node. And then from this area, that's also a high volume node. And the area in between, low volume node. So it will likely look something like this on the left hand side. So we have maybe not till that extent. We're gonna have some bumps here and there as always. Maybe something like this, right? Maybe. And let me confirm or deny that right now. We got it. pretty much right? Because we have two high volume nodes that are very significant. We have, of course, this lower region, and we also have this region till this region. So where that 1 hour is, there is volume there. This region in the middle is a low volume node, and this region is a high volume node as well. Good to know. But yeah, let's see if there's anything else we can mark on the 1 hour and then start to make some conclusions, confirm or deny certain levels, and do things of that nature. And honestly, I'm not noticing. Ooh, what time is that? That was 13, low volume. We'll mark this out right here. Mark out from the low right there. Mark it out as a 1 hour. And yeah, that's gonna be our last level of interest really on the market, right? And as you can see, this is gonna provide a pretty tough area to actually trade. We have to see if you break out of this area or if you can break out of this area right here. And if you can break out of that area, we have to see if you can break out of this overall range. Because honestly, if you can't break out of this overall range, it's going to be very difficult for price to actually head higher. And let me just extend it all the way to where our volume was. Where was that high volume? Right there. Okay. So this area right here is going to be imbalance above liquidity. This area, yeah, that's sure that can count. It's in volume. This area, that's the last resistance lower, so I'm gonna mark that imbalance below. Lower than that, we can head down to this area where we do have some volume. This area, I'm not really too keen on this 2 hour or this 1 hour here, simply because it's in low volume. And actually, we'll keep it marked out for one reason, simply because we came out of this high volume node, retraced back into this range where we previously denied, and then we moved up. So I'm gonna keep it. This 4 hour, it's in that lower volume region that we did see reaction off of once we pushed higher. So I'm gonna keep that as well. This region sure can be kept, and lower region, yep. Bounce above until this region, which is valid as there is volume at that region. Here, there is volume at that region. Here, the 1 hour, there's volume as well. So from here, it should technically, let's see, be a generally easy path to head to this upper region. But yeah, nothing's really getting invalidated. But let's see if there's anything we can notice using the footprint chart. Likely saw seller absorption down here, right at that 2 hour, which is good sign for the buyers. But up here as well, we saw lots of volume where we marked out this liquidity, marking that as a viable level. This area though, I'm gonna remove it simply because there's absolutely no volume generated. Volume is just revolving at this area where we're sitting at right now. This area, there's not really any volume. Let's go here. Up here, I am seeing buyer absorption. Buyers did try to kick in. We had larger volume here at the top where we did deny off of. I'm trying to see if there's any higher volume location which I can perhaps test. This region is what I hope. Where was it? Where was it now? Where was this one? 16K. It's okay. This one right here. 113 right there. Yeah, so next level which we marked out was pretty good. This area is kind of iffy, but simply because of that movement that we saw there, I'm going to keep it. This upper region is going to be pretty significant. We saw lots of buyers try to get in near the top. Sellers came in. We see that aggressive selling here at the bottom until they finally broke out. This is all-time high region, so that's gonna stay as well. So yeah, as you can see, we're put in a kind of difficult area to trade because we are in that volume range, but we can simply play within this imbalance above region, right? So this is what I'm gonna look for in this upcoming week. I want to see a multitude of things, including which side can we break out of? Are we going to be able to break out of this high, or are we going to be able to break below this region? I want to see where price actually breaks out, and where they break out will determine direction for me. If we break out of this upper imbalance above area, what that signifies to me is that buying pressure might be strong enough to take us to that next level, because this area is a very key level, right? And it doesn't have to be that exact level. Bookmap liquidity is going to confirm or deny that area. Or typically I'm going to expect bookmap liquidity to be near it for more specificity. But once you break out of that level, realistically, that shows buyer intent and aggression. If we can break out of that level and show aggression afterwards with potential passive seller urgency, then realistically should be able to head higher, because we're simply mean reverting. And that's why I wouldn't prefer something of that nature. Maybe we can see something where we head to this level and then simply start falling down again. Or we simply break out of this level and start heading up. But I definitely want to see how this area reacts and also how this lower area reacts. If we start seeing more absorption here, let's say tomorrow morning market open, right? Say sellers try pushing price down lower here, but we see lots and lots of selling absorption. Then buyers start to pop in, and there's bookmap liquidity up top, and we see passive buyer urgency. Then I would be comfortable to take longs targeting this upper imbalance above area. And simply by looking here, that would put us at a pretty good risk reward, maybe 1 to 3. Definitely looking at that. So if we mark this out, this is what I'm looking for. Something like that, or something like that. Let's mark it out. I want to see reaction here. This is what I'm looking for, and my preferable outcomes are going to be like such. Either going to be this area or this area. Honestly, I'm not 100% as to if the shorts are going to continue, right? We've already made our way back down into this high volume region, and in this high volume region we might just revolve like this. And we do have to be aware of that. We can't just put ourselves in a breakout perspective the entire time. We should be prepared to trade reversals from either side of the range and capitalize off of that as well. So that's why I'm definitely looking for these types of reaction. But those two levels are definitely going to be the things I'm looking for coming into this week early. And yeah, depending on where we break out of, that's where next week might be positioned. If we break out of this region and continue showing, we might head back up to the all-time high region. If we break down, we might head to the next region down. Down near this level around the 6,000s, or around 6,100 to 6,000. That would be the next range, in my opinion, that would be highly likely that we head to if we break this lower imbalance below. But then again, we could reverse from any of these areas. It just depends on how the market participants react at the different levels. But on top of this, let's just go ahead and see if what we found on ES gets confirmed or denied with what we find on NQ. Let's see. See that it was this level. Simply just gonna mark out whatever we can. All the significant ones at least. Don't put one there. 4 hour here. 4 hour here. 4 hour here. There we go. Not really seeing anything there. 3 hour, we do have a nice old 3 hour zone here, which I am going to expand to those highs because it doesn't hurt to do so. 3 hour main liquidity here, and the upper region, of course. Slow region, don't mark. Okay, if these lowers, maybe something there. Not seeing anything there, not seeing anything there, not seeing anything there as well. 2 hour, wouldn't mark that, would mark this area. Nothing there. You could mark this level out. So I'll sweep that level and head it higher. Nothing else really I'm finding on the 2 hour. We could mark this area. Don't know if that's really going to make that much of a difference. I'll rather mark that layer down here, as that would be more significant in my opinion. 1 hour, see that area, we didn't mark it on the ES, so I'm not going to mark here on NQ. We have this region up top here. We have this region up here. And let's see now. Nothing else I'm spotting here. As you see, this one did get tapped 3 times. Not seeing much here. This 4 hour does cover that 1 hour that we have there. We do have this area right here, which I am going to mark out. Let's mark out from here. Alright, that's good. And not seeing much else on NQ other than that. So what this is showing to me is how NQ looks, at least, is that this liquidity region might be area, but NQ is a lot wider. If this was that, but let's just mark out a volume profile on NQ as well. I usually don't do that, but it might be able to help us. Volume majority is here. We do have volume there, and we do have volume there. What we saw in NQ that was different from ES was simply that once we broke above this liquidity region right here, we had a large splurge from volume up till around this level right here. And as we broke out of that level, we quickly came back into that level and came back towards the lower region of that level. It's honestly not really gonna help us to an extent. That's with the volume. That's kind of with the volume, more in the low volume area though. This area. Not this area. Nah. Yeah, I honestly don't think volume profile is gonna help us too much on the NQ. But honestly, nothing is denying our ES confluence. What I'm seeing is essentially just the same thing, right? I want to see how price reacts to either that level or this lower region once again, right? If he can break below, make new lows, I want to see how we react. at this lower region. As you can see on NQ, we have a lot of things that prevent us from heading lower and lower. Let's just see this distance. Only around 150 ticks between here and here, likely 200 there, likely 250 there. There's a lot of things that are preventing us from heading lower, which does make me to believe that we might head lower into those areas, test that region, and then potentially head higher on a higher time frame perspective. But for the reset, do you want to see how price reacts to either this level or this level? I am going to put myself in more of a selling bias, simply because I don't want to flip out on all this selling aggression that we've been seeing. But then again, rebalancing mechanisms might occur, making the markets head upwards, right? Just something to keep an eye out for. But yeah, everything we saw in NQ is not really going to deny the things that we saw here. What it's going to do, it's actually going to make us lean into, hold on. It's going to make us lean into this bias more. So this lower thing is what I'm expecting more. If you do head on up to the upside, it is likely that we make a reaction here, maybe here, but more likely, more probable that we make a reaction off of here. So I'm essentially going to keep my confluences open for this week, right? Simply going to play off of reactions off either levels and watch how we react at these levels. Watch how we're going to react at this lower region. Watch how we're going to react at each one of these levels right here, with the extra focus on this level and this region right here. But yeah, that's what I have personally noticed with our pre-market analysis. If the selling momentum does continue, I wouldn't be surprised. But if we make a rebalance and retrace towards the upside, I wouldn't be surprised with that as well. If you take a look at the VIX, this could provide us another sense of understanding as well. Let's just go ahead and mark out this region right here like such. Just mark up relative highs. As you can see, what we've seen was that we came up to these highs, we broke out and used it as resistance. Here we broke out and came up to that 25 region around here per se. It's on 4 hour and then make it much easier. So yeah, where we're at right now is a key level of resistance on the VIX, but it's more of the lower impact resistance. We've came to this level multiple times, and we've also rejected off of this level a multitude of times. But same applies to this 25 region. Same applies to this upper above 34 region as well. What I want to see though is if we start to head lower and the VIX starts to move higher, if we hold above this region right here, then it's likely that we head up more on the VIX, which means that we head lower more on ES and Q. So I'm going to be looking out for that as well on the VIX. But yeah, that's essentially all I got for you guys for this week's pre-week analysis. Don't really have much else to say. If you have any other questions regarding anything I've discussed, whether that be an order flow or simple chart or fundamental as well, I'll be more than happy to answer your questions in the free Discord server. The link is in the description down below, and there are many things that you can gain out of it, all again for completely free. Additionally, if you want to take a look at how to use order flow for a pretty decent extent for free using Addis, check out the links in the description below for that as well. That's the order flow platform that I'm personally using. It's very user friendly and it has a lot of free functionality as well that you should definitely do your own research and check out. But other than that, that's all I have here for today, and I'll see you guys later tomorrow. tomorrow morning for the pre-market analysis, and later tomorrow for market analysis session. So I'm excited to see you guys then. Goodbye.